यस हेलो एवरीवन, अ वेरी वेरी गुड मॉर्निंग फ्रेंड्स। कैसे हैं आप सभी लोग? क्या आप सबको मेरी आवाज़ आ रही है अच्छे से? प्लीज़ बताइए, क्या आप सबको मेरी आवाज़, वेदर एम आई ऑडिबल और नॉट? प्लीज़ टेल मी वेदर एम आई ऑडिबल और नॉट। यस फ्रेंड्स, हेलो हेलो हेलो, हाउ आर यू? प्लीज़ टेल मी, आप सब लोग कैसे हैं? चलिए, एम आई ऑडिबल? चलिए, सो हेलो एवरीवन, आई एम मोनीश वोरा, आई एम अ चार्ट अकाउंटेंट, अ कॉमर्स ग्रेजुएट, आई हैव आल्सो क्लियर्ड CFA level 1. My friends, this video would be your revision lecture for theory of production and cost. The chapter number 3, we are starting with chapter number 3, the revision of chapter number 3. But before starting this lecture, I want to tell you all that we are starting with the May 2021 batch. We are starting with the May 2021 CA Foundation batch from 18th of November. Yes, from 18th of November, we are starting this batch. So I welcome you all on our this YouTube channel for the May 2021 batch. If you have any of your juniors or friends who would be giving the exams in May 2021, then please spread the word that we are starting with the batch from 18th of November. Okay, all subjects, you will get all the subjects over in this channel itself. Now my friends, we are also conducting daily MCQ classes for our December 2020 students. We are also conducting daily MCQ classes at 12 p.m. Class is conducted on law and BCR MCQ class. Then 1 p.m. accounts is conducted. Then at 6:30 p.m. this class is very very important. At 6:30 p.m. I come on the Unacademy app and I discuss many MCQs. So my one of my series is 100 MCQs in 100 minutes. So I've started this series on the Unacademy app, and it is just, many students are attending it every day. So please do join the session. Today also at 6:30 p.m. I'll be coming on the Unacademy app live for this. Okay, so let's go. This would be your English revision lecture for the chapter number 3, unit 1, that is theory of production. So we'll discuss theory of production in this video, and we'll discuss theory of cost in the next video. Okay, now what you have to do is, please wait. Yes. So friends, you need to install the Unacademy learning app on your from Google Play Store or App Store, and from there you can subscribe to. Please wait. Yes. So you can install the Unacademy learning app from Google Play Store or App Store. Yes, and from there you can download the app and see in Unacademy app there are two types of classes. One is Unacademy special classes. So special classes are totally free, and the other type of classes are Unacademy plus classes. So the way you subscribe to Amazon Prime and Netflix for watching all the movies, all the video content, all the premium content, in the same way over here also for watching all the movies, for watching all the lectures of all the subjects from different faculties, you need to subscribe to Unacademy plus. Yes, so there are options of 1 month subscription, 3 month subscription, 6 month subscription, 12 months and 24 months subscription. You get the classes of CA foundation and intermediate both. You get the classes of CA intermediate, CA foundation and intermediate, both the classes you are getting in this very much subscription. So see, foundation 4 subjects and intermediate 8 subjects, a total of 12 subject classes you are getting in just 21,000 for two years, and 17,500 if you opt for 1 year. Yes, if you want a 10% off on these amounts, so you can use my coupon code, that is MB Sir. So you'll get, see, all the amounts have now reduced by 10%. So you can also avail the discount using my coupon code MVSIR. Now you also have an option of no cost EMI option. So if you're opting for 6 months, 12 months or 24 months option, you can also avail the same in EMI. So you can pay the fees in installments also. Okay, what I'll teach on Plus is that I have already completed BCK chapter 3, BCK chapter 4 and 5 on Unacademy Plus. So if you want to watch these videos, you need to subscribe to Plus. And currently this course is going on, crash course on economics chapter 4 and 5. So currently this course is going on and I'll complete this course by 19th of November. So please do join the Unacademy Plus so that you can study from me the whole course. Okay, now we'll start with the English revision of this very much chapter. Theory of production and cost. First we'll talk about unit 1, theory of production. The first concept which comes under is what is production. So generally when we think of production, we think that production is making something. Production means making something material, but in economics production even includes, economics production also includes services. And what is the definition of production? Production denotes the process in which you convert input into output. Production is a process as per economics in which you convert inputs into output. And why are you converting inputs into output? Because you want to satisfy human wants, human needs. Yes. Now the output can be a good, a commodity, or it can be a service. So even services are covered under production as per economics. So the work of a doctor, the work of lawyers, work of teachers, service by retail shops, all these things are covered under production. And you can also say that production also means creating or adding utility. Yes. So for example this is wood. Yes, this is a log of wood. You can use this wood as an input and convert this log of wood into a chair. You can convert this log of wood into a chair. Now the utility of this chair will be more than the utility of log, obviously. Yes, because we can use the chair for sitting. You cannot use the log for sitting for long time. Yes. So that is why using the production process, what do we do in the production process? We create or add utility. You create or add utility to the things which are already existing in the nature. And we can add 4 types of utility. That is form utility. That is, I have converted this log of wood into chair, so I have converted its form. So that is called as form utility. What is place utility? Yes. So for example, all the crops, fruits which are grown in the farms, they don't have much utility in the farm. But if you transport those goods, those vegetables and fruits from the farm to the markets, what you are doing? You are transferring the goods from one place to another place, and by transferring the vegetables and fruits to another place, you are adding utility to it. Yes. How? Because when you sell vegetables and fruits in the market, more and more people can use those vegetables to satisfy their wants. So that is called as place utility. Then one more things come under this, that is extraction of minerals. So you know that you extract minerals from the ground. Now the minerals have no utility when they are in the ground, but when we extract them and when we use them for various purposes, in that way what is happening? We have changed their place and we have added utility to them. That is called as place utility. Then time utility is making available of resources at a point of time when they are usually not available. That is called as time utility. Under this we say that many times what do? We do canning. What is canning? So in cans we store many fruits in cans so that the fruits can stay for longer. So for example, I always give the example of strawberries. So even in this type of season you get strawberries. How do we get strawberries? Because many people store strawberries in the cans so that they can be made available at a point of time when they are not normally available. Are you getting my point? Please tell me. Yes, are you getting my point? Chaliye, next is, my friends, personal utility. So whatever the personal skills which are used, yes, in doing all those processes. For example, when you are changing the form, you would need labor. You would need labor to what to do? You would need labor to change the form. Yes, you would need people working for you. Then under place utility, you would need some drivers who are driving the truck and they are transporting products from one place to another. In that also you need personal skills of many people. So that comes under personal utility. Yes. Now the next important point is the next important point is that under production what happens is, now see, production does not include the work done within a household. Yes, see, for the production as per economics, as per economics does not involve the work done within a household by anyone out of love and affection. Yes, out of love and affection, or voluntary services or goods, if goods are produced for self consumption. All these activities does not count under production. Yes, so what is important there for production? What is important? It is important that there should be an intention to exchange. Yes, so if you are providing goods or services to anyone, the other person should give you something in exchange also, है ना? So mostly what do we give in exchange? Money. Yes, currency, or the price. You have to pay the price to buy any good or service. Yes, so there should be an intention to exchange in case of production. Only then we call it as production. Okay, so the work done by, for example, when your mother cooks food at your home for you. Yes, when your mother cooks food for you at your home, she is not doing it because you will give her money. She is doing it out of love and affection. Yes, she is doing it voluntarily for you, so that doesn't come under production. But if the same lady has a restaurant, if she is the owner of a restaurant, and she herself makes the food over there, then that services will come under production, because when she is making food in a restaurant, yes, when she is making in her own restaurant, then why she's making it? She's making it to earn money. Yes, so that would come under production. But the food which she makes at home, that activity wouldn't come under production as per economics. Okay, now we come towards the next important point, that is factors of production. So what do you mean by factors of production? All the inputs which you use to produce any goods or services, all those inputs are called as factors of production. So there are 4 types of factors of production: land, labor, capital, and entrepreneur. What do you mean by land? Land just doesn't mean the normal land. Land also means all the natural resources that you get from the environment. All those things come under land. So even air, sunlight, water, that also comes under land itself over here. Then comes labor. Again, labor, what is labor? The human effort, you need laborers for working. For you. Yes, so labor would come under that. Then comes, my friends, is capital. Then comes the next point is capital. What do you mean by capital? See, capital just doesn't mean money. It means money. I'm not saying that it doesn't mean money. See, money is included under capital, but capital means all those assets. Which you are using in the production process. Yes, which are used in the production process. All those things come under capital. And the last point is, my friends, entrepreneur. See, please tell me whether land, labor, and capital, can they work themselves? Please tell me. See, labor can work themselves, but what will happen? We need someone to show them the direction of how to work. Yes, can land, labor, and capital work themselves? Yes or no? Please write in the comment section. Yes or no? Please write in the comment section. Can labor and land and capital can work themselves? No. So we need someone who gives them the direction of how to work. Yes, and we need someone who accumulates all these things. So what will entrepreneur do? He will accumulate land, labor, and capital in the right proportions and use it in the production process. Yes, so for that thing we need entrepreneur. Now generally we say that the factor income for land, generally we get rent. Yes, we have to pay. Yes, for using land we have to generally pay rent. Then for using labor we have to pay wages or salaries. Yes, and for using capital we have to pay interest. And for entrepreneur, what is the income which an entrepreneur earns? The income which the entrepreneur earns is the profit. Yes, so these are the incomes which each of the factor of production earn. For land we have to pay, or land gets rent, labor gets wages, salary. For capital we have to pay interest, and entrepreneur earns profit. Yes, these are the incomes of the factors of production. Now we'll not go into much deep into this. We'll directly move forward to the next important point, that is production function. So this is the most important point of this chapter, that is production function. Now First of all, we have to understand that what is a function. First of all, we have to understand what is a function. Now see, function is a mathematical expression, or function is a mathematical statement. Yes, it is a mathematical statement which expresses the relationship. It expresses the relationship between independent variable and dependent variable. Yes, no, please tell me. And dependent variable, this is called as a function. Now when I am talking about production function, what happens when I am talking about production function? It means that in the process of production, what is the independent variable and what is the dependent variable, and we'll show the relationship between them in case of a production function. Now see what is written over here. Now see, production function is a statement of relationship between firm's scarce resources and the output that results from the use of resources. Now the type of input which you use, will, yes, it will give some type of output. So the output depends on the type of input used. Yes or no? The output, the goods or services which you want to make, the output depends on the type of inputs which you are using. Yes or no? Please tell me. Yes or no? So that is why my output is the dependent variable and my input is the independent variable. So over here, my friends, over here, have a look over here. What is happening is that here we have given a mathematical expression, and what is this? See, Q means the output. Output is equal to the function of. So how do we read it? Output is equal to the function of the type of inputs which you use. So the type of inputs are A, B, C, D, and up to N. What do you mean by this? That the type of inputs, your output depends on the type of inputs which you use. This is shown in your production function. Now there are some assumptions of production function. So what are the assumptions? The relationship between inputs and output exists for a specific period of time. Yes. So see over here output, this amount of output is not what you have produced till now. Yes, for example, your firm has been working for 5 years. Yes, you have a factory which is working for 5 years. When you are depicting this function, this Q doesn't mean that up to 5 years total how much have you produced. No. This production function is for a particular time period. So when you express a production function, you have to tell that this production function is for the next year, or this production function was for my previous 6 months. So a production function is always for a specific time period. It is not a measure of accumulated output over time. Then next point is, my friends, the state of technology. The state of technology is assumed to be constant. The state of technology is assumed to be constant. What do you mean by constant? Why? See, if you keep on changing the technology which you are using, for example, if you keep on advancing, if you keep on improving your technology, what will happen? The function will keep on changing. The function will also keep on changing. Yes, because for example, when you are using an old machine earlier, for example, you were able to produce 5 units in a day using the old machine. But now if you use a new machine, it may happen that you are able to produce 8 units in a day. Now what is happening? By changing the technology, this function will also keep on changing again and again, and we don't want to do that. So that is why, what do we say? That we have to assume that the production technology is constant. And the last point is, my friends, whatever the input combinations are included in a particular function, the output resulting from their utilization is at the maximum level. So we always assume that whatever inputs you use, the output which you are getting, would be the maximum. The output which you are getting would be the maximum amount of output which you can get from these inputs. Okay. Now the next important point is, but for our analysis purposes, when we'll do a further analysis using this production function, we assume that there are only 2 inputs. Sir, why do we assume that there are only 2 inputs? Because see, see, in real life there are many inputs, but if we keep on adding inputs over here, then it will be very difficult to analyze many things using that. So that is why, for the sake of simplicity, what we do, we assume that we are using only two inputs, that is labor and capital, and that is why if we restate the above production function, then we get the production function as your output is a function of the labor and the capital which you are using. Are you getting the point till here? Please tell me yes or no. Are you able to get this point? Please tell me yes or no. Yes. So someone is saying, sir, first wala, kindly tell this first wala assumption. Please listen to me. The relationship between inputs and output exists for a specific period of time. So this relationship is for a specific period of time. For example, when you are saying that quantity is 10 times labor plus 2 times capital. What do you mean by this? That if you are using two labors, for example, if I am taking an example, that if for example, if I say that if I am using two laborers and I am using one machine, then what will happen? That output, my output will come as 10 times 2 plus 2 times 1 machine. So what will be my output? My output will be 12 units. Now the production function which I have shown over here, this is just an example. The production function shown over here is for a specified time period. Yes, it is not depicting the total how much have you produced till now. The production function doesn't depict that aaj tak aapne kitna banaya, total how much have you produced till now. It is not depicting that. It is for a specified time period. Whenever you express your production function, you have to tell the time period, that for which time period this production function would be applicable. Because during the years your laborers would be different, during the years your capital would be also be different at different point of time. So it will change. Yes, 21. Okay, अरे no problem यार, 21 ले लो. It is not important. चलिए 21, ठीक है, 21 कोई बात, calculation mistake 21. Okay, 21 units, ठीक है. What I'm telling you is that this is for a specified period. It is not depicting that that till now how much you have produced. It is not depicting that. Why? Because in the past you may have changed your number of labors again and again. You may have changed your number of machines again and again. So this production function is always for a specified period. You have to tell the period also, that for which period are you specifying this type of production function. Are you getting my point? Please tell me. Are you getting my point? Please tell me, friends. Are you getting my point? Please tell. Yes, chaliye. So here comes short run production function and long run production function. The short run production function. Yes. Array 20. 10L plus 2C. What was that? 10 into 2 plus 2 into 1. Okay, it is 22 units. Okay, 22 units. Sorry. I was just giving an example that this is an immaterial thing. Have you studied accounts? This is over here immaterial. My concept, I was trying to explain this concept over there. Okay, no problem. Yes, sorry, from my side, it was mistake from my side. Now please move forward. The next point is, my friends, short run production function. Okay, short run production function and long run production function. Now in case of short run production function, what is the problem, official Babu? I am not understanding that. What is your problem? Okay, short run production function. What is short run production function? In the short run, what happens, that at least one of the inputs used remains unchanged. At least one of the inputs which you use should remain unchanged in the short run. What do you mean by that? That in the short run you are not able to change all your inputs. You are not able to change all your inputs. Okay, are you getting? Yes. Then the short run production function shows the maximum amount of good or service that can be produced by a set of inputs, assuming that at least one of the inputs remain unchanged. So see, since for our further analysis, we are considering only labor and capital. So what do we assume as constant in the short run? We assume that our capital will be fixed in the case of short run and our labor will be variable in case of short run. So see, in the short run, a firm cannot install a new capital equipment to increase production. So we are assuming that in the short run, we obviously cannot install new machinery to increase our production. Yes. So in the short run, our capital is fixed. Okay. And we use short run production function for law of variable proportion. And my friends, long run production function, when we come in the long run, all the factors of production are variable. In the long run, all the factors of production are variable. Yes. So what happens over here, that in the long run, I can even change the labor, I can even change the capital in the long run. Yes. So over here, we assume that the amount of all the inputs are free to vary. We can vary all the inputs. Yes. And we use long run production function to explain the law of returns to scale. Now, next is Cobb-Douglas production function. So Cobb-Douglas, Paul Douglas and Cobb-Douglas, Paul Douglas and C.W. Cobb, they both defined a new type of production function, that is Cobb-Douglas production function. In this case, first of all, you have to remember that this production function doesn't apply to an individual firm. It does not apply to an individual firm. You have to apply this production function to a whole industry. So when I'm talking about a steel industry, so this production function will be applicable to the whole industry. It cannot be, you cannot apply this to an individual firm. Okay. Now the formula is that Q is equal to K times L raised to the power of A into C raised to the power of 1 minus A. Now what is A and 1 minus A? Yes, these are the labor, or these are the output elasticities. But in your book they have not given much in detail. So what they are saying, that K and A are constants and Q is the output, L is the labor and C is the capital. Now what you have to remember is this, that using this production function, they gave a conclusion that if you want to increase your production, the labor should contribute about 3/4. The labor should have a contribution of about 75% in the production, and capital should have a contribution of at least 25% of the production. Yes. So what do they concluded? They concluded that in order to increase your production, the labor should contribute 3/4 in the production, the labor should contribute 75% of the production, and capital should contribute 25% of the production. That is what they concluded. Sir, how did it come? It is not important. It is not in your course, and this is also, you have to remember this thing. Okay. And obviously this revision lecture, we cannot go much in detail in that. Okay. Now we'll start with the law of variable proportion. Now see, in the short run, what is happening is, if I want to increase my production, I cannot increase the fixed factors. Obviously I cannot increase the machinery to, I cannot increase the capital or machinery to increase my production. So in case of law of variable proportion, what is happening is, now see, for example I have labor, one labor, and for example I have two machines. Okay, in capital I have two machines. Now now please assume that we are in the short run. Now what does this mean? This means that in the short run, if I want to increase my output, what will I have to do? I can increase only my labor, but I cannot increase my capital, because in the short run we cannot increase the fixed factors. Now what will happen? In order to increase my output, I will increase the number of labors. So I'll use not 2 labor, but capital again I can use only 2. Then I'll use 3 labors, but capital I'll again use only 2 machines. Then I can hire 4 labors, but capital again I'll have to use 2. Now what is happening? The proportion of the inputs that you are using are changing again and again. Whether the proportion that you are using are changing again and again. First you are using the inputs in 1:2 proportion. Then in the next case you are using inputs in 2:2 proportion. Then in the next case you are using 3:2, then 4:2. That is why what you are doing over here, you are analyzing that if I increase my variable factor, then how my output will be affected due to that. And this is studied under law of variable proportion, that if I change my variable factors, then how will it affect the How will it affect the output is studied under the law of variable proportion. Are you getting my point? Lavlesh Chaudhary ji and Harshit Agrawal ji, good morning. Are you getting my point or not? Please tell me whether are you getting my point or not. Please tell. Yes. So see here, your see the ratio, the proportion in which you are using your inputs is changing again and again. Yes. So this is the law of variable proportion. Now see what has happened. Oh yeah. The law states that as we increase the quantity of one input, which input? Variable input, which is combined with other fixed input, the marginal physical productivity of variable input must eventually decline. So what does the law say? What does the law say? If you continue increasing the quantity of the labor, each additional labor, the contribution to the total output, that each additional labor is giving keeps on decreasing. Yes. So due to each additional labor, the marginal product of the labor will keep on decreasing. That is what is stated under the law of variable proportion. Okay. Now why do we call it as law of variable proportion? Because we are analyzing the behavior of output studied by changing the proportion in which the inputs are combined. So I'm again and again changing the proportion which I just told you right now, then which I just showed you just now. Then law of returns to variable input. What do you mean by this? See, as any change in output is taken as a resulting from additional variable input, law of returns to variable input. When I am increasing my variable input, what return I am getting because of that? So that is also studied in this also. That is why this law of variable proportion is also called as law of returns to variable input, and this law is also called as law of diminishing returns. Why? Because my returns eventually diminish. Sir, why your returns are eventually diminishing? Because the marginal product is eventually will decline, and since marginal product will eventually decline, the total product, that is the total production, will eventually decline. And if my total production eventually declines, then obviously my returns will also eventually decline. So this is why this is also called as law of diminishing returns. Chaliye, next production schedule. Next is production schedule. So see, what is total product? Total product means that this is your variable input, this is your variable input. Okay, this is your variable input, and you must be having some fixed input also which you cannot change. You must be having some fixed input also which you cannot change, but you can change the variable input. So see, we are changing the variable input. Now using the variable input and fixed input, what is the total production that you are getting? 100 units. So this is for units. Then what is average product? Total product divided by Q is average product. So 100 divided by 1 is 100. And what is marginal product? Because of one additional labor, how much is the increase in the total product? Of 100. So that is why 100 is the marginal product. Now we'll do this for the fourth labor. Now see what is happening. Now because of 4 labors and the amount of fixed input, we are getting a total production of 440 units. Now what is the average product? 440 divided by 4, we get 110. And what is marginal product? Because of the 4th unit, what is the increase in the total product? That is an increase of 110. So answer will be 110 for marginal product. Now, so what is total product? Total product is, my friends, total product is the total output resulting from the efforts of all the factors of production combined. Then R, average product is total product divided by number of units of variable factor, and my marginal product is marginal product at n is equal to total product at n minus total product at n minus 1. Yes, or we can also write that marginal product is equal to change in total product upon change in Q. Yes, this is also a formula of marginal product. Chaliye, next, relationship between average product and marginal product. Now see, when average product rises, when average product is rising, now see, this is an observation. So why does this happen? This is actually an observation. So using the table which you have seen, we can observe some things, and this is the observation between average product and marginal product. Now see what is happening. When your average product rises, what is happening? एवरेज प्रोडक्ट बताओ वापस से. नाउ सी व्हाट इज एवरेज प्रोडक्ट ओवर हियर. एवरेज प्रोडक्ट कैसे निकलता है. एवरेज प्रोडक्ट सी your total product divided by quantity of variable input. 210 upon 2 is 105. 110 sorry 440 divided by 4 is 110. Then 600 divided by 6 is 100. This is average product. Simple है ना. This is average product. Okay, चलिए over here. Now see, when our average product increases, what happens. Our marginal product is more than average product. When our average product is maximum, what happens over here. Our marginal product is equal to the average product. And when our average product is decreasing, what happens then. At that point of time, my marginal product is less than average product. So you can also see this. Now see, you don't need to remember this, you don't need to learn this. You can also you have to remember this using the graph. So see, I'll also talk about the graph right now, but first we'll look at the assumptions of the law of variable proportion. What are the assumptions? The state of technology which you are using will obviously again be given and unchanged. What do you mean given means constant. Yes, the state of technology which you are using will be constant. Yes, then there must be some inputs whose quantity should be kept fixed, because see, we are in the short run. Then obviously there should be some input which should be fixed. Only then you will be in the constant, in the short run. Now, if all the inputs are variable, then how will you be in the short run? Then you are in the long run. Are you getting my point? Yes. Then the law does not apply to these cases, to those cases where factors must be used in fixed proportion. So this law will not work under circumstances. For example, if I tell you that labor, that for 1 unit of a particular product, you need to have 2 laborers and 1 machine, or you need to have 4 laborers and 2 machines. Okay, you need to have 4 laborers and 2 machines. Now what does this mean? That always for one unit you need to use 4 laborers on 2 machines. Only and only when this proportion is met, only then you can produce 1 unit. Now see, if I increase my labor by 1, now tell me whether my production will increase or not. What I'm telling you in this example, that in order to produce 1 unit, you have to use labor and machine in the ratio of 4:2 or 2:1 or 4:2. Now what is happening over here? If I just increase my labor just by 1 labor, if I increase 1 labor, now my proportion has not increased. It is now, see, my labor has increased. It is 5:2, but I want under 4:2. So here also I will be able to produce only 1 product until and unless I reach to 8:4. Until and unless I reach to 8:4, only then I'll be able to produce 2 units. Up to then, only 1 unit can be produced. Are you getting my point? Jitesh Agrawal ji, for Jitesh Agrawal ji and all those students, who want this lecture in Hindi, I have Jitesh ji, I have uploaded a Gyan Dhara revision lecture. On theory of production, and this lecture is totally in Hindi. Now why I'm recording this lecture in English? Because of our South Indian students, they want the lecture in English. That is why I'm recording this revision in English, but I've already recorded the theory of production part in Hindi also, so you can watch that lecture in totally Hindi. Yes, if I start speaking in Hindi and English in this lecture itself, then this lecture will become very much long. Okay, so I'm really sorry. I'm really sorry, because see, this is a lecture for English. Okay, for English students. Okay, yes. 6:3 will also we'll get 2 units in 6:3, and then what will happen? Even for 8:4 we'll get 2 or 3 units. So what my intention is that in cases where I have to use the inputs in fixed proportion, at that point of time what will happen? That point of time my law of variable proportion will not work over there, है ना? Because what is happening, if I am saying labor 4 and capital 2, then what is happening here? 4:2. Now if I am increasing by 5, my production will not increase. My production was 1 over here, then here it is also 1. My production is 0. My marginal product will always come 0. My marginal product will always, many times will come 0. So that is why, see what is written over here. Have a look. Have a look what is written over here. Yes. The law does not apply to the cases where the factors must be used in fixed proportion, because marginal product will be then be 0 and not diminishing. So that is why this is the reason which I told you just now. And we consider only the physical inputs and outputs, that is in unit terms. We are not economically, and not the economic profitability in monetary terms. What they are saying in the fourth point is that here in this table we are talking about the units, that total product, wherever here it is written total product 100, this is units, है ना, units of output. This is units of output, and this is not expressed in terms of money. This is not expressed in terms of money. This is expressed in terms of units. So for example, at 8 quantity of labor, you have 50 units of marginal product, you have 90 units of average product, you have 720 units. So we are concerned with the number of units and not with the economic, and not with the money amount. Yes. Next. Next, we'll move forward to the next point. Now see, here I have given a summary of the, summary of the law of variable proportion. Yes. So this is our chart, this is our graph, that see our total product curve increases. First it increases at an increasing rate, then after the point of inflection it started decreasing, it started increasing at a decreasing rate, then it reaches a maximum and then it decreases. So again I'll write it over there. See here, my up to this point my total product will increase at increasing rate, since my marginal product is increasing till then, then after this point, after the point of inflection, what happens is here my total product increases at a decreasing rate, it increases at a decreasing rate. Then at this point my total product is maximum, where my marginal product is 0, my total product is maximum, and then my total product is decreasing. Finally started decreasing in stage 3. Then so see in what happens to total product. First in the stage 1, stage of increasing returns, what is happening? It increases at increasing rate till the point of inflection. So what is the point of inflection? The point from which the rate of change of the curve increases. Now see, after this point, the rate of change of the curve is changing. First it was increasing at increasing rate, and after that point it is increasing at decreasing rate. So from the point where the rate of change of the curve decreases, that is called as point of inflection. So in the stage 1 of law of variable proportion, that is the stage of increasing returns, what happens? Our total product increases at a increasing rate till point of inflection, and after that it increases with decreasing rate. Then in stage 2, what is happening? Stage 2 is called a stage of diminishing return. Why is stage 2 called a stage of diminishing return? Because in the stage 2 our marginal product is decreasing from the start itself. That is why our stage 2 is called a stage of diminishing returns. Then total product increases with decreasing rate in the stage 2 over here, and the stage ends where total product is maximum. So see, where the total product is maximum, the stage 2 ends. And then stage 3 is called a stage of negative returns. Why? Because in the stage 3 your marginal product becomes negative, that is why stage 3 is called as stage of negative returns, and your total product is decreasing, starts decreasing in the stage 3. The next, now we'll come to the marginal product. So see, marginal product is this green line. This green line is the marginal product. So first it increases, it is increasing, then it reached a maximum, and then it started decreasing. Yes. So see, MP rises and is maximum corresponding to the point of inflection. And see, in the stage 1, see what is happening. You don't need to remember anything. Just remember the chart. In the stage 1, what is happening? Your marginal product curve is above the average product curve. That means that in the whole stage 1, your marginal product is greater than average product. Are you getting my point? Please tell me yes or no. Are you getting my point? Yes or no? Then then your marginal product is decreasing but positive in stage 2. Now see, in stage 2 your marginal product is decreasing but it remains positive, it has not crossed the x-axis. So under stage 2 your marginal product, what is happening, it is decreasing but it is positive, and the stage ends, the stage 2 ends where total product is maximum, or you can say that the stage 2 ends where marginal product is 0. Okay, chaliye next. Then in the third stage obviously marginal product is decreasing and negative, and now we'll come to the average product curve. Now see, this is the average product curve, this is the average product curve. Now in the average product curve, see what is happening. In the average product curve, see what is happening. My average product curve first increases, it reaches a maximum and then it decreases, but it will never intersect the x-axis. Sir, why? Because see, what is average product? Average product is total product upon Q. Now can quantity become 0? If the quantity is becoming 0, that means that you are not producing anything. If the quantity is 0, that means, if the quantity of variable input, if the quantity of variable input is 0, how can the quantity of variable input be 0? It cannot be 0. Yes, it cannot be 0. You need to have some of the input as variable, and you need to have some of the variable inputs. It can never become 0. So that is why if Q doesn't become 0, our total product will never become 0, and that is why the value of AP never comes out to be 0, and it cannot intersect the x-axis. Okay, so see what is happening in the stage 1. AP is rising in the stage 1. See, it rises, and at the end of stage 1 AP is maximum. So see, stage ends where the AP is maximum and average product is equal to marginal product. Then average product is decreasing but positive. See, average product is decreasing but positive in stage 2. In stage 2 average product is decreasing but it remains positive. And again in the same thing happens in the stage 3. It is decreasing but it remains positive. So same thing is happening in the stage 3. So this was the summary of law of variable proportions. Now we'll move forward to the stages of operation. Now we'll move forward to the stages of operation. Now an important question rises that a rational producer will seek to produce in which of the stage? Yes, so a rational producer will never want to produce in stage 3. A rational producer will never want to produce in stage 3. So why? In stage 3 my marginal product is negative, है ना, my total product is decreasing. Why will I want to produce in stage 3? I'll never produce in stage 3. Yes, so see, even if the variable factor is getting free of cost, if I'm increasing the variable factor my marginal product is becoming more and more negative. So even if I get the variable factor for free, still I'll not hire him. I still not use the variable factor, because my marginal product keeps on decreasing when I'm using the variable factor in stage 3. Then so a rational producer will always stop before the beginning of stage 3. Then now the next thing comes that people say that sir stage 1 is the stage of increasing returns. Sir, increasing returns, see sir, returns are increasing, we should produce in stage 1 because our returns are increasing. Beta, but see what is happening. If you move from stage 1 to stage 2, your production can even increase further. See over here what I'm telling you is, if you say that sir I'll produce only in the stage 1, but see, if you go in the stage 2, what is happening? You can still increase your production and your still returns can increase in the stage 2 also. So why do you want to stop over here? A rational producer will always try to produce in stage 2 itself, because in stage 1, if he is producing in stage 1, then he should try to hire more of variable factors. He should try to hire more of variable factors in order to increase his production and come in the stage 2. So see, stage 1 and stage 3 are called as economic absurdity or economic nonsense, and a rational producer will always produce in the stage 2 for the reasons which I gave you. Okay, and sir, at which level? But sir, see, in the stage 2 also we have in the stage 2 we have these many types of variable factor. That is, how much variable factor will I hire? Will I hire this much variable factor? Will I hire this much, or this much? How much? So it will depend on the available resources with you. If you have more money, so you'll produce up to this point where your total product is maximum. So it will be depend on the resources which you have and the amount of labors which you have. Yes, so it will depend on that. Okay, but a rational producer will always want to produce in the stage 2. Chal, next. So that also can come as an MCQ. Chal, next is, my friends, returns to scale. Next point is returns to scale. Okay, now see, when I am talking about scale, yes, when I am talking about scale of production, in case of scale of production, I have to increase my all the inputs together. When I am increasing all the inputs together, only in that case I can say that I have changed my scale of operation or scale of production. Yes, so see, returns to scale is studied under long run. We have just studied that long run production function is used. See, I show you, long run production function is used. See, long run production function is used to explain the law of returns to scale. Do you remember? I have just taught you this. Now my friends, have a look. Over here. Yes. So since we are in the long run, we can change all the factors of production, because all the factors of production are variable in case of long run. So in case of, if I want to change the scale of operation, see, a change in scale means that all the factors of production are increased or decreased in the same proportion. When I'm increasing all the factors in the same proportion or decreasing all the factors in the same proportion, only then I can say that I have changed the scale of production. Okay. Now, changes in output as a result of variation in the factor proportion is called as law of variable proportion, which we just studied right now. But on the other hand, the study of changes in the output as a consequence of changes in the scale of production is the subject matter of this topic, returns to scale. So here what we try to study in returns to scale, we try to study that if I increase my inputs in the same proportion, if I increase all my inputs in the same proportion, then what effect it will have on the output. If I decrease all the inputs in the same proportion, then what effect it will have on the output. That is studied under returns to scale. Are you getting my point or not? Please tell me. Are you getting my point or not? Sir, can you give an example of this? Do you want an example? Now see, for example, I'm using 10 labors and I'm using for example 20 machines, and I'll do this as 40. I'm using 40 labors and 20 machines. Okay, so capital, I'm assuming that we have machines under capital. Okay, so now I'm using 40 labor and 20 machines. Now I have to increase all the inputs in the same proportion. Now if I increase all the inputs, for example, by 50%, so I'm increasing all the inputs by 50%. So what is happening? Acha, I'll also tell you that my output, for example, my output over here is 100. My output over here is 100 units. Okay, output over here is 100 units. Now when I'm using 40 laborers and when I'm using 20 machines, I can produce 100 units. This is the meaning of this. Now when I am increasing all the inputs by 50%, this is an example. It is not necessary that always will increase by 50%. I am taking an example. Hi Kamlakanta Das. Chale. So now what will happen? I'll increase it by 20 and I'm increasing this by 10. Now what is my revised number of labors? Now my revised number of labors are 60 and 30. Now for example, using 60 labors and 30 machines, you are able to produce, I'm taking an example, that you are able to produce over 150 units. What does this mean? That there is an increase of 50 units in this. Yes or no? Are you getting my point or not? Please tell me yes or no. What I told you, I have taken an example over here. To explain you the returns to scale. We were using 40 labors and 20 machines till now, and using 40 labor and 20 machines, I was able to produce 100 units. But now what I did, I increased all my inputs by in the same proportion, that is 50%. So I increased my inputs by 50. So I increased 40 labors to 60 and my machines increased to 30. Now using 60 labor and 30 machines, I am able to, for example, I am able to produce 150 units. What does this mean? That there is an increase of 50 units in the output. This means, my friends, that there is an increase of 50% in my output. Yes or no? Please tell me whether there is an increase in the output by 50%. So this is an example of constant returns to scale. This is an example of constant returns to scale. So what is constant returns to scale? If I increase my inputs in some proportion and my output also increases in the same proportion, then that is called as constant returns to scale. Over here I increase my inputs by 50% and my output also increased by 50%. That is why this is called as constant returns to scale. But for example, if I write over here, okay, for example, now in my example number 2, now what is happening? Rest of the data is totally same. Now see, in this example what is happening? When I am using 60 laborers and 30 machines, now I am able to produce 180 units. So tell me that whether there is an 80 units increase in the output. Yes. By how much percentage your output has increased? Please tell me. By how much percentage your output has increased? Please tell me. By how much percentage your output has increased? Please tell me. Fast. I want everyone to reply. Please reply. Please reply, guys. By how much percentage my output has increased? It very good, Shashank. Asthana. Very good, Shashank. My output has increased over here by so actually this is over here. Yes, it has increased by 80%. Yes, very good. So what is happening over here? Please tell me what is happening over here. Here my friends, what is happening? Have a look. I increased my input by 50%, but my output increased by 80%. This is an example of increasing returns to scale. And now if I write over here, for example, if I write over here, for example, I am writing 130 units. So there will be an increase of 30 units in the output, and here there will be increase of 30%. So when I am increasing all my inputs by 50%, but my output increased only by 30%, this is an example of decreasing returns to scale. Are you getting my point or not? Please tell me yes or no. Are you getting my point or not? Yes or no? Please tell. So over here, have a look. What is constant returns to scale? With the increase in the scale in some proportion, the output also increases in the same proportion. This is constant returns to scale. Then increasing returns to scale, output increases in a greater proportion than the increase in inputs. This is called as increasing returns to scale. Then our decreasing returns to scale means that output increases in a smaller proportion with an increase in all inputs. This is an example of decreasing returns to scale. Yes, very good. Now what happened is that Cobb-Douglas production function was used to explain the returns to scale. But what happened is they originally Cobb-Douglas assumed that returns to scale are constant. So originally what they had assumed that the returns to scale were constant. What do they mean by that? Now see what is the formula of this? Q is equal to k into L raised to the power A and C raised to the power of B. Now what is A and B? Actually A and B, A is over here. See, Q is equal to k raised to the power L raised to the power of A and C raised to the power of B. Now over here, my friends, A is the output elasticity of labor. And B over here is the output elasticity of capital. So what do you mean by output elasticity? Now it means that, for example, if the value of A is, I'm giving an example, if the value of A is 1.50, what does this mean? This means that if I increase my labor, by 50%, then my output will react to the increase in labor by 1.5 times. When we studied elasticity of demand, when we studied price elasticity, what was price elasticity saying? What was price elasticity saying? That if the price elasticity is 2, what does this mean? That if I increase, for example, if I increase my price by 20%, then my demand would react 2 times to the change in price. That is, my demand will decrease by 20% into 2, 40%. The same way here, this is output elasticity, that if I increase my number of labors by 50%, then my output will react to the change in labor by 1.5 times. Are you getting my point or not? Please tell me. This is a very conceptual thing. Please tell me, are you getting my point or not? So now tell me one thing. When my elasticity is greater than 1, what happens? That if I increase my price, for example, if I increase my price by 30%, then what will happen? My demand will increase by more than 30%. My demand will decrease by more than 30%. Sir, why more than 30%? Because here it is greater than 1. Then when my elasticity is equal to 1, what will happen? My demand will decrease in the same proportion, since elasticity is 1. And when my elasticity is less than 1, what will happen over here? My demand will decrease by less than 30%. Yes or no? Please tell me. The same way. नहीं, अरे luxury goods, Manisha ji, luxury goods and normal goods come under income elasticity. Income elasticity is different, price elasticity is different. Under income elasticity, you do that classification of luxury and normal goods. It is done in income elasticity and not here. Please don't get confused, Manisha ji. I am talking about price elasticity over here, and you are talking about income elasticity. That is different. Income elasticity is different. Okay. Now the same way, when I am now, see what is A plus B? Please tell me, what is A plus B? Can I say that my A plus B is the total input elasticity or total output elasticity? Can I say that my A plus B is the total output elasticity? Yes or no? Please tell me. Yes or no? Please tell me. Yes, sir. That means I can write over here, instead of E, I can write A plus B. I can write A plus B over here. See, I can write A plus B over here. So see, A plus B, that is the total output elasticity. So if I am increasing my inputs by, inputs by 30%, then what will happen? If I am increasing my inputs by 30%, then what? And my input and my output elasticity is greater than 1. My output elasticity is greater than 1. Then what will happen? My output will also increase by more than 30% because it is greater than 1. Are you getting my point or not? Are you feeling the concept or not? Please tell me. Now, if my A plus B is equal to 1, what will happen? If here I increase my output by 30%, what will happen over here? My output will remain the same. My output will also increase in the same proportion. And if my A plus B is less than 1, then what will happen? When I increase my input by 30%, my output will react less. My output is reacting less to the change in output, to the change in input. That is why my output over here will increase, but it will increase by less than 30%. Are you getting my point or not? And this is the concept. This is the concept of this. And because of this, my friends, when my a plus b is greater than 1, they say, see here my output is increasing more, my output is increasing more than input. That is why they call this as increasing returns to scale when a plus b is greater than 1. When my a plus b is equal to 1, over here this is a case of constant returns to scale, because my output is increasing the same proportion. And when my a plus b is less than 1, it is a case of decreasing returns to scale. This is the concept which is not written in a book, but this is how we have to explain this. This is the explanation of this concept. Did you get this concept? Please tell me. And did you know this concept before? Did you know this concept before? Yes or no? Please tell me. Did you know this concept before, that why a plus b is greater than 1? Why do we write as increasing returns to scale? Why a plus b equal to 1 was written as constant returns to scale? Yes, this is the reason. Yes, this is the reason. So now whether it is clear, that when I write over here that a plus b is greater than 1, why it is called increasing returns to scale? When I write a plus b equal to 1, why it is constant returns to scale? When I am writing a plus b is less than 1, why it is decreasing returns to scale? That was the reason which I told you. Are you getting my point? Yes sir, all clear. Now see, now Pooja has asked me that whether sir there is 100 in 100 lecture today. Yes my friends, I am conducting 100 MCQs in 100 minutes every day at 6:30 p.m. on the Unacademy app. Every day at 6:30 p.m. on the Unacademy app. Totally free. Totally free. Yes, so you can go to the, so what you have to do, you can go to the community tab. So there is a community tab in the YouTube itself. In our channel, you can go to the community tab, and there I have uploaded a pic. For my today's lecture, and I have also shared the link over there. So go over there and please see that pic. So you'll get all the details of my today's lecture at 6:30 p.m. That is totally free for all on the Unacademy app, and many students are joining in every day, and it is a whole lot of fun. So please make sure that you are attending this lecture at 6:30 p.m. today. Okay, chalo. Now chalo, I'm moving forward. Next is the next point is production optimization. Now what is production optimization? Production optimization means that what combination of inputs should I use? What combination of factors of production should I use in order to maximize my profit? In order to maximize my profit, what combination of inputs should I use that my cost will be minimum and my profit will be maximum? This is the production optimization. This is the meaning of production optimization. Now we have to study over here two things, that is ISO quants and ISO cost line. ISO quants and ISO cost line. What do you mean by ISO quant? Now ISO quant shows us all those combinations of two inputs. So here I can take input X and here I can take input Y. I can ulta ho gaya, koi baat. Here I will take input Y and here I will take input X. Okay. So what does a production function show? What does a ISO quant show? That at this ISO quant is depicting a particular level of output. This particular ISO quant is depicting a particular level of. Thank you so much, Gulnaz ji. Thank you so much for liking that pic. Thank you so much. This particular ISO quant is is depicting a particular level of output. That if for example, if you are using your inputs in this proportion, then also you can produce this amount of output. For example, I am taking that, for example, this ISO quant is depicting that you can produce 100 units of output using any combination on the ISO quant. What does this mean? That if you are using the inputs in this proportion, then also you will get 100 units. If you are using the inputs in this proportion, then also you will get 100 units of output. If you are using the inputs in this proportion, then also you will get 100 units of output. So what does this mean? See, an ISO quant represents all those combinations of inputs which yield the equal quantity of output, which yields an equal quantity of output. So this is what ISO quant shows. We also call ISO quants as equal product curve, production indifference curve, or ISO product curve. These things can come under MCQ. Okay, next. Next point is isoquant schedule. So see over here, I have an isoquant schedule. So these are the factor combinations. Combination A, combination B, C, D, E. Now see, since this is an isoquant schedule, what does this mean? That if you have two factors, factor X and factor Y, if you use these two factors, for example, if you are using 1 unit of X and 12 units of Y, what is happening? You will get, for example, I'm assuming that you are getting 100 units of output in this. So you'll get 100 units if I using 1 unit of X and 12 units of Y. If you use 3 units of X and 5 units of Y, still you will get 100 units itself. So what does this mean? Your isoquant depicts all those combinations. Your isoquant depicts all those combinations which give the same level of output, Now see, even isoquants are negatively sloped. Isoquants are convex to the origin. Yes, then the isoquant on the right represents a higher level of output. So see over here, if I have one more isoquant over here, if in this photo, if I have one more isoquant over here, now what will happen? This isoquant, the isoquant in green color, will represent a higher level of output as compared to the isoquant in purple color. Yes, so the higher the isoquant, higher will be the level of output. These are the properties of isoquant. And obviously isoquants are non-intersecting, the same logic which we studied in difference curve. Same over here, that even isoquants are non-intersecting. But the difference, the major difference which comes, this comes under MCQ, that what is the major difference between isoquant and indifference curve? In case of indifference curve, what do you show? In case of indifference curve, you show the combinations of two goods which gave the same level of satisfaction, but you cannot quantify satisfaction. But in case of isoquant, you are depicting the level of production, and the level of production or the number of units which you are producing, it can be easily quantified. So this is the major difference between isoquant and indifference curve, because under isoquant we can quantify the output, but in indifference curve we cannot quantify the satisfaction derived. Okay, now my friends, thank you so much, Adarsh sir. Yes, so Adarsh sir is also here in our discussion. Adarsh Joshi sir, he teaches law and BCR in our team, and he's very amazing and wonderful faculty. He's conducting an MCQ quiz, I guess, on at 12 noon. Yes, right now itself at 12 p.m. he's conducting an MCQ class on the Unacademy app, I guess. Yes, and he has also started a SLS, that is section learning sessions. So please do attend that also. So it is a very hit series. So do attend that, and do attend the lecture at 12 p.m. also. Okay, let's go. We have 10 to 15 minutes for that. Let's go. Chaliye. Yes, 12 p.m. on the app. Yes, very good. Chaliye. So what is an iso cost line? So we have discussed about isoquants. Now we have to discuss about iso cost line. Yes, so iso cost line depicts all those combinations which give you the same cost. For example, if I produce at this, if I choose this combination, that what will happen? For example, if I say that I am getting a cost of rupees 1000 on this in the third iso cost line. If I produce on this point, still I'll get 1000 rupees of cost. If I produce on this point using these inputs, still I'll get a cost of production of 1000. If I produce on this point, still I'll get a cost of production of 1000. So what a iso cost line depicts? So see, it shows various alternatives. Yeah, 1 second. It shows various alternative combinations of two factors which the firm can buy with a given outlay. Okay, so whatever be the combination of factors the firm chooses, the total cost to the firm remains the same on one iso cost line. So higher the iso cost line, higher will be the cost of production. Now we'll finally come to the production optimization. Now where will the producer incur the least cost? Producer will incur the least cost where your iso quant is tangent to the iso cost line. So where your iso cost is tangent to the iso cost line, at that point we call it as producer's equilibrium, and at that point it is the least cost combination of factors. Are you getting my point or not? Please tell me. Yes. So the cost of producing 1000 units would be minimum at the factor combination represented by point C. So this is point C, where isocost line is tangent to the given isoquant. So over here I complete my this lecture. Yes, so we can move forward to the quiz time now. We can move forward to the quiz time now. And I know that I have not taught many topics in this lecture. Why? Because I have just focused on the more important points in this lecture. Obviously we are doing revision, so we need to focus on the more important points of our syllabus. Okay, chaliye. And if you want, if someone is comfortable in Hindi, so I've also uploaded a detailed revision video of around 2.5 hours, and that is a detailed revision video in Hindi. So you can also watch that in Hindi if you want to do that. Okay, chaliye. The first question on your screens is, the two economies, the main difference between short run and long run is that. So you have to answer in the comment section as 1A, 1B, 1C or 1D. Okay, you have to answer like this in the comment section. Please answer that what is the answer of this question. Please tell that what is the main difference between short run and long run. Yes, so what is the answer? The answer is option C. The answer is option C, that in the short run at least one of the firm's input should be fixed. Yes, at least one of the firm's input should be fixed. Are you getting? Yes. Next. Very good, very good, very good. Next question, my friends. Which of the following statements are false? Which of the following statements are false? Please tell me. The production denotes the process by which man utilizes resources to transform into commodity services to satisfy human wants. Production process need not necessarily involve conversion of physical input to physical output. Production includes work done within a household by anyone out of love and affection and voluntary services. Please tell the answer. What is the answer of question number 2? 2A, 2B, 2C or 2D? What is the answer? Please write in the comment section. Please write in the comment section. What have they asked? They have asked that which of the following is false, which of the following is wrong statement. They have asked the wrong statement, my friends. They have asked the wrong statement. Okay, yes. So what is the answer? The answer is option C. They have written production includes work done by household. Are nahi, production does not include work done within a household or voluntary services. Are you getting? The false statement is option C. Answer is option C. Okay, next question is, what is the average product of the first 2 hours of labor? What is the average product of the first 2 hours of labor? Please tell that what is the average product of first 2 hours of labor. Please tell the answer. Yes, now see what is happening. Now see, first I'll have to calculate the total product over here. What is total product? Now see, by hiring a second labor or by increasing the number of hours of the labor, what is happening over here, that my marginal product has increased by 280, my total product has increased by 280. That means that my total product will be 580. So my total product at 2 units is 580. So my average product at 2 units will be 580 upon 2, है ना, total product upon quantity of variable factor used. So answer will be 290. Answer will be 290. Answer is option C. Are you getting my point? Are you getting my point or not? Next, question number 4. If the marginal product of labor is below the average product of labor, it must be true that. So you have to remember these types of questions by the graphs. Now see, this is my marginal product, this is my average product. Now what they are saying, that if the marginal product of labor is below the average product, so which area is he talking about? In this question they are talking about, in this question they are talking about this area. Okay, in this question they are talking about this area, that your marginal product is below the average product. Then what will happen? Your marginal product is negative. No, this is wrong. The marginal product is 0. No, it is not 0. The average product is falling. Yes, average product is falling over here. and the average product of labor is negative. No, this is also wrong. So what is the answer? Option C is the answer. Are you getting? What is the answer? Option C. So these types of questions you should solve using the diagrams itself. You don't need to remember anything. Remember the diagram. If you remember the diagram, then you will able to solve these questions very easily. The last question for today. Which of the following is incorrect? Statement regarding iso cost lines. Which of the following is incorrect regarding iso cost lines? Please tell. Question number 5. Please tell question number 5. Which of the following statements are incorrect regarding iso cost line? Which of the following is incorrect? Please tell. Answer 5A, 5B, 5C or 5D. Now the answer is option C. The answer is option C. Why? What they are saying, that on the same iso cost, see what is written, upper side of same iso cost line. What they are saying, that if you are using this, if you are producing on this level, here your cost will be more and here your cost will be less. Does it happen like this? No, it doesn't happen like this. At every point the cost will be the same. Every point the cost will be the same on the same iso cost line. So this point is wrong, and what they have asked the incorrect statement itself. Yes. So over here I end my lecture. Thank you so much friends for watching this lecture. Do subscribe to our channel. We have already crossed 3K. Subscribers. Thank you so much for that. And please subscribe to Unacademy Plus. And use the coupon code MV Sir. I am coming live today at 6:30 p.m. on the Unacademy app. I am coming live today at 6:30 p.m. on the Unacademy app for an MCQ class, that is 100 MCQs in 100 minutes. Okay, so I am coming for this class. Please do join that class and it would be a lot of fun. Okay, thank you so much. We'll meet at 6:30 p.m. Bye bye. And do watch Adarsh Sir's lecture on the Unacademy app right now. Okay, bye bye.